Welcome to the One Setup for Life by Z Trading Accelerator. Alright, so first I will show you our one setup for life for bullish price action. Alright, so this is exactly how we look for a trade for bullish price action, right? This is very similar to the New York Open reversal. But in this time, this model is fractal. That means you can use this model any time frame, in any time frame that you want. You can use this in 1 minute, 5 minutes, 15 minutes, 1 hour, 4 hours, in any time frame that you want. Alright? This is basically, like I said, a large scale Judas wing. So first, if we are bullish, we want to see price go lower and reach a higher time frame point of interest. It might be in the form of a 1 hour fair value gap, an order block, a breaker block, mitigation block, or rejection block. Alright? Any of those PD array or point of interest. And then after that, after reaching a higher time frame point of interest, you should go into a lower time frame. At the lower time frame, you will see a sell side liquidity sweep right here, and after that, the market should shift higher. We have here our market structure shift right here in this fair value gap. This is exactly your first entry, right? This is your first entry. You can enter buy right here, target for the nearest buy side liquidity, or maybe aim for 1 to 2 risk to reward. That's your personal choice. So after that, the price should continue higher and then retrace lower once again, ideally taking out another sell side liquidity, at the same time reacting into a fair value gap or an order block. Once you see that, you can enter exactly right here, or you can enter right around here if you want to wait for more confirmation. And then you can aim for the nearest buy side liquidity right here, or target 1 to 2 risk to reward. Alright, so that's always up to you. So our first element for this setup is a higher time frame point of interest. This higher time frame point of interest, this depends on what kind of trader you are. Maybe your higher time frame is 1 hour, maybe 15 minutes, or maybe 5 minutes. Alright, so like I said, this setup is fractal. You can use this model in any time frame that you want. You can use it in 1 day, 4 hours, 1 hour time frame, 15 minutes, 5 minutes, and 1 minute. So, where do we find this setup exactly? So, we find this setup inside premium and discount arrays, inside point of interest, in the form of fair value gaps, breaker blocks, order blocks, mitigation blocks, and rejection blocks. And also, we find it in a higher time frame liquidity. So our first element is a higher time frame point of interest and liquidity. Alright, so once we reach that area, we should go at the lower time frame and look for our entry setup. So in this higher time frame liquidity, it is in the form of a previous daily high, previous weekly high, equal lows, trend line liquidity, or all those. Remember, these are all types of liquidity. Alright, so this is one example. This is not the only way to trade our one setup for life. Okay, this is just one example how we use our one setup for life. We can use this setup exactly for the classic buy day. Alright, if you look at this very closely, we know that the London low is just a Judas swing, right? Remember, if we're going up, the price goes down first and starts to go up. If you go at the lower time frame right here, look at this chart. If you go into the lower time frame after taking out a liquidity right here, a sell side liquidity, or maybe reaching into a higher time frame point of interest, look at the lower time frame and you will see this exact setup. And also here, we go higher at New York kill zone, we have a retracement, right? If you look at the lower time frame, you will see this exact setup. All right? If you look at this very closely, this New York kill zone retracement, this is just like the London kill zone. Yes. This is also a Judas swing. Remember, this is a Judas swing. This is a Judas swing. If you look at this, the price going down lower. We have here going down lower. We have also here going down lower. Then the price reached the higher time frame point of interest. In this example, right here, maybe a liquidity or maybe a point of interest. Then the price shifts higher and then continues higher. Exactly like this. At the lower time frame, it will shift higher and then continue higher. Like this. The price took out this sell-side liquidity, reacted into a fair value gap or an order block, then the price shifts higher and then continued higher, just like this. See that? If you look closely, this happens exactly at London and New York kill zone. Right here, go down and then go up. Go down and then go up. Go down and go up. Go down and go up. Alright. Would you look at that? Perfect, right? As we can see right here, price made the low of the day at London kill zone after reacting into the higher time frame point of interest. If you go at the lower time frame, you will see this. Market structure shift higher, enter at a fair value gap, and then the market continued higher. Another one at the New York kill zone, price went lower, reached a higher time frame point of interest, maybe a fair value gap or an order block. Then we had a market structure shift higher, and then the price continued higher. This setup is also present in our New York Open reversal. Would you look at that? That's why I only taught you this 2 daily profile, because this is exactly all you need. So as you can see right here, in the New York Open reversal, the price created the high of the day initially at the London kill zone, then went lower, reached a higher time frame point of interest right here, and then the price has shifted higher. You can see this setup exactly right here. But this is bearish, so if you use the bearish version of this setup, you will know exactly what I mean. In the New York reversal setup, we can saw this exact setup exactly as it is. As we can see, we reached a higher time frame point of interest, and then the price took out that sell side liquidity or equal lows. Then the market shifted higher and then continued higher. As we can see right here, that is just the same with this. The price reached a higher time frame point of interest. If you look at the lower time frame, you will see a market structure shift lower, enter at the fair value gap, and then the price should continue lower. The price is going down before going up. The price is going down before going up. We reach a higher time frame point of interest right here. We reach a higher time frame point of interest right here, right? So this is a single example of our one setup for life. Step 1, mark out a higher time frame point of interest or liquidity. So as we can see right here, we have equal lows, and we also have a 1 hour fair value gap right here, which is a higher time frame point of interest or PD array. So let's mark it out both. Step 2, wait for price to reach into that point of interest, right? So as we can see, we are currently inside the London kill zone. Price went down, take out this equal lows right here, at the same time reacting into that 1 hour fair value gap, alright? Since we are inside a higher time frame point of interest, we want to see price reaction. So, step 3, wait for the price to meet with time, right? So this is only applicable if the price has reached the point of interest when we are not yet inside a kill zone. So remember, time and price is very important. Even if we have a setup, if we are outside a kill zone, no trade, alright? If there's a price, a setup, but no kill zone, no trade. If we are already inside a kill zone and there's no setup, of course we will not trade. But if we both have time and price, we are inside a kill zone and a setup presented itself, we are going to have a trade. Alright? So always remember this. So now let's go into the 5-minute time frame, right? Because we already reached the 1 hour fair value gap. So we should look for entry positions to go higher. Alright, so wait for smart money reversal. So as we can see right here, after reaching that 1 hour fair value gap, we took out this sell side liquidity. At the same time, the market shifted higher. We have our market structure shift right here. So we should be looking now for long position. Step 5, let's wait for a fair value gap and enter on the fair value gap. Alright, so this is a reminder. If we have a small fair value gap, you can enter at the nearest fair value gap. But if you have a big fair value gap, you can enter at the 50% of the fair value gap. I will explain it to you in the next coming slides or videos. So in this example, we have a small fair value gap. So you don't need to enter in 50% of that fair value gap. You can enter at the top of this fair value gap, stop loss at the low, and target 1 to 2 risk to reward or the nearest buy side liquidity. Alright, target for only to restore reward or nearest liquidity. And as we can see here, we have take profit here. Price went up right away into our take profit and also eventually taking out that buy side liquidity. As we can see, the day opened here. We went down first to go higher. Just always remember our one setup for life. You can print it out so that you can practice it and you can look it always at the charts. Alright, so that's it for this video. Don't worry, I will give you a lot of examples so that you can master our setup easily. I will see you on the next video.